Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on euro currency. So in general on Friday we haven't got any surprises, so the pullback has happened on the area that we have discussed in the video. Not even on Friday, on Thursday, just because on Friday we were speaking about the Great British pound. So here it's 106.18 area approximately that we have discussed, mostly because this is the fib level and because this is actually previous top. And for a short term, previous lows, of course. And this is not just lows of this downside action right there, but take a look, this is also these lows, which is also very important. And this potentially was in an area that's market slightly hasn't reached, so it's mostly it was around this level. And on a daily chart, in nearest time, we probably will get lots of interesting performance. It's just because whole downside action here looks like well, excellent thrust on the weekly chart. Market right now has completed the XOP here and stuck inside of the wide weekly conference support. It is not that they were sold on the weekly, it's were sold on the daily. But existence of the thrust here potentially might be the source of excellent patterns for trading. In particular speaking, if somehow market will be able to climb within the 2-3 weeks back to the 107.8 area, which is actually confidence and stable, it's also oversold, overbought here. This might be a great chance for a brand bottom on the weekly chart. And in the current fundamental environment, this brand bottom might be not only with the target around 618 support of the whole upward action, right? But it might be just downside continuation pattern, and after it will start, this market just could keep going lower within the major tendency. The same story we could say about the potential double repo pattern. It's also just might be some background for a deeper retracement on the daily chart as well. Although currently it's difficult to suggest what particular pattern might trigger this deep retracement, but potentially speaking from a technical point of view, this is possible. But all the stuff, well, it's a bit for next weeks. Currently, I think that we could actually focus on just nearer standing patterns. Particularly speaking, on Friday we've got the bearish grabber. You do not see it on the retail broker charts, but at least on my FX choice, I do not have the grabber. But if you'll take a look at the futures, Chicago Mercantile Exchange, euro currency futures. So here, as you could see, Chicago Mercantile Exchange, you could see that grabber indeed has been formed. It suggests the taking out of these lows. And following of the harmonic swings that we have here, well, theoretically it might be. It doesn't mean that we get immediately downside straightforward continuation, but it means that, well, if grabber will be limited with just the minimum target, it should suggest returning back to the bottom. So it means that these lows might be challenged for one more time here. That's at least what the grabber tells. On the 4 time frame chart, we do not have something really special. That's particularly the area that we have discussed. It's around 50% resistance of the whole down of this downward action. Here we do not see something really interesting. But on the hourly chart, as we mentioned on Thursday, we could get the hand and shoulders. And the tricky moment stands in the contradiction of the pattern that is forming right now on the hourly chart and the grabber that we have on the daily. By the all rules, the highest standing time frame is always dominate over the lowest standing time frame. It means that the grabber is more important and has a stronger pattern than a potential head and shoulders. But everything could happen. And from that standpoint, it's a bit tricky moment for making a decision. Here, at this point, it's impossible to say what particular pattern will work. And in the current circumstances, all things that we could do, and actually what we could say, is that you could make the decision either to take a bit more risk and make the bet on the pattern that you like, or just sit on the hands and wait for more confirmation what will happen. So if you'd like to take the short position, you will have to step in and place stop above the grubber stop, which is an invalidation point. If hand shoulder starts really work, it's probably you will be out on this upward continuation, some kind of the extension, some A, B, C pattern to the upside. The same is true for the bullish position. So if you'd like to buy, you will have to take the position somewhere with the shoulder, placing stop below 618 level, and see what will happen. In the current circumstances on the bullish side, I would say that probably it makes sense to wait a bit more, just because here market has formed bullish reversal swing, and usually in these circumstances, especially on the background of the significant downward action, it could show a bit deeper retracement. So somewhere around 105.45 maybe you could think about position taking. Maybe you will get some more clarity in the performance. So if we will see something of this kind, right, it's collapsed right to the level, probably better to not take the position. This will be in direct confirmation of the bearish sentiment on the market. But that's only for those who would like, is ready to take a bit more risk with the decision making and just using slightly better price for position taking. For the others who are not ready for that, well, you will have to wait and see what will happen, getting more confirmation. So as I said, maybe some stronger drop will be, or for a bearish position taking, or you will decide to take position if market will start forming some bounce where risk will be even smaller for position taking. For the bulls, it might be starting of the reversal at their shoulder bottom. When market will start reverse up, you will see the hand shoulder starts working. That will minimize your risk, so you could take the position and placing stop either below the shoulder already or below in 618 level with possible upward action here. So-called Jod Napoli minesweeper entry technique, something of that sort. But at this moment, unfortunately, well, both patterns still stands valid, and we only have only the common rule that daily chart is a bit more important than hourly chart. That's all. So that's our 2 cents on the euro currency. Makes your decision. So currently, for the purpose of our analysis, we are not considering taking long positions because it's very short term and it doesn't correspond to overall sentiment. I'm just talking about it as I know that lots of traders are trading on intraday and even on the 15-minute chart and lower time frames, and might be important. But with our analysis, if you're trading with our view, we are not considering taking the long positions. So if the pullback will happen, we will just use it to consider taking the short position at the better price. So that's our approach in the current circumstances and current fundamental environment. So that's all for today. Let's see what will happen on Monday.